What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is January 27th of 2025. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, while I not only have some big updates to talk about when it comes to Bitcoin and altcoins, we've got to talk about a major macro event that I don't see many people in crypto really covering properly. And that is the release of the DeepSeek version 3 model, the open sourced AI model that came out of China back over the past week. I want to spend some time to talk about what this is going to mean for Bitcoin, for the broader financial markets, and why we need to pay attention to this. But beyond that as well, talk about the core metrics in relation to crypto. We've got a lot to unpack here in today's video, so if you have the time, stick with me here, grab a cup of coffee. You guys are not going to want to miss this one, and consider dropping a like. As always, it's a great way to support the channel. So let's go ahead and kick things off here. I want to start by just taking a look at price, because while I know a lot of people were getting really juiced up and excited about the fact that we reclaimed above the 21-day, while we were holding on that level for some time, we were not able to clear through the prior highs, and if since then, at least as of now, things might change by the close of the daily candle, we're going to have to wait and see. We are more likely than not probably going to close below the 21-day. And I want to go ahead and again emphasize here that what we discussed, this idea of a correction below the moving averages, similar to what we saw back here between March of 2024 to September of 2024, something like that, maybe even on a shorter time frame, is still within the play here. This is still something that can happen, right? When you aren't able to hold in that 21-day, especially after holding sideways for multiple months, this showcases here that whereas here in October and November, we had a clear, distinct difference between the available supply in the market and the amount of market demand, with MicroStrategy coming in, the Bitcoin ETFs coming in a big way, mainly MicroStrategy, really using its premium to buy up a lot of Bitcoin. Now that is starting to wane. It's starting to equalize. And it's really an important question to be asked about whether or not we really have that next wave of liquidity coming. And that's where I think a strategic Bitcoin reserve or other governments or central banks coming in and buying up Bitcoin in a sort of race is really the only narrative that could drive Bitcoin much further from this point without us facing some kind of pullback or correction. Now, if we just take a look at the metrics here, the month of January pretty much came on par with December. Looks okay, nothing too bad here, right? Definitely better than a lot of months throughout the year. Not as big as what we saw in October, November. Again, hence the slowdown in Bitcoin's price acceleration, but nonetheless, not terrible, right? Pretty good. So considering that, what else do we have to watch? Well, we have to watch the MicroStrategy numbers. MicroStrategy also showing some improvement here, getting back into double-digit Bitcoin purchases on a weekly basis, 11,000 Bitcoin. Pretty solid number. Definitely adds pressure on top of the bicep pressure from the Bitcoin ETFs, and in fact is almost just as important in many cases, sometimes far outweighing what we're seeing in the ETFs. So MicroStrategy is another fundamental dynamic here. These two things are really the only major buyers of Bitcoin, right? The institutional inflows from IBIT and other ETFs, as well as MicroStrategy. Right? These are the two big dynamics. So the question is whether or not these numbers can continue moving up. We need to continue watching these here. Right? I would say the biggest thing here to understand is that if you're seeing these metrics here where the Bitcoin ETFs are buying thousands of Bitcoin a week, MicroStrategy is buying thousands, and you're seeing Bitcoin's price act like this means we need more. We need more inflows. So we better see that number continue to tick up over the next week or two, because if we don't, that's going to be your precursor to understand that right now there is a lot of sell-side supply at these valuations. I know a lot of people say, oh, there's not much supply on the market. I beg to differ. Price is telling us something here, and as much as in the same way we were clearly saying that there was a shortage of supply here versus demand back between September to November, right? That is clearly changing here, and we need to adjust ourselves accordingly to that. Another thing as well is the liquidation heat map. Not many shorts here on the table, but a lot of longs here, potentially set to get knocked out over the next month or two. I do not want you guys to doubt the reality here that this could very well play out. If we look at any of the models here for the Binance, BTC, USDT liquidation maps, you're seeing very thin levels of shorts. You're seeing a lot of heavy longs down here who are in the 50, 60, 70K range, who probably believe they're never going to be tested, that they continue to maintain their positions. That's where the exchanges, at least as of now, have an incentive to drag price towards, to force out as many traders as possible. Taking a look at total market cap as well, and just wanted to zoom out here again. and emphasize that total, as similar in the sense of Bitcoin, has been generally flat around this $3 trillion mark since back here in November. And as we continue to go sideways, as the 21-day clearly shows a sideways trend in regards to price, right? And price is kind of waning around it. It's not finding support on it. These are the exact same signs we saw back here in April 2024. I'm not here to say that Bitcoin's doomed and it's going to zero. All I'm here to say is that probably in the short term, this is going to be correcting in some shape or fashion. And we've got a long way to go before we make it to even the 200-day, down here at 2.8 to 2.6 trillion. It's a couple $100 billion. Double-digit percentage decline here in regards to valuations. Not to mention that 200-week is coming up nice and cozy against this prior support range. So it's not out of the question. I think we could get something like that here over the next couple of months, especially if a bigger correction comes in equities. We're going to get to that here in a little bit. I know some of you might be wondering, why am I kind of talking about a correction of that magnitude? First off, in regards to others' market cap and like altcoin dominance, this is totally possible because altcoins right now, I think the market is finally pricing in, and it has to do with the fact that any insiders of projects are just unloading tokens whenever they get the chance. Essentially speaking here, others' dominance is rolling off of a cliff here. After a 7-year long line of support, this looks like it's set for a really big breakdown. And I think the reason is because there isn't any strong fundamental narratives in the market. There's meme coins, AI agents, all this stuff that is purely speculative in nature. And I think anyone who is really trading in it kind of knows that, but we're all just kind of playing the game here. We're just trying to trade. It's a cutthroat market. I hope to buy in early and sell to someone else at a higher price. That's kind of the name of the game with these things. No fundamental belief in the direction of altcoins and Web3 as a technology. Right? At least the market's showing us that. Maybe you don't feel that way. I can completely respect that. Maybe you're more optimistic on it. But I can sense that being in the market for a long time. I can sense it here in regards to dominance. The market is not excited. Each of these bounces off this line have gotten weaker and weaker. Look at how it used to be in the past. Clear uptrends, right? And they would accelerate faster and set a new relative highs. Since then, weaker and weaker bounces here that are being faded just as quick. Now, that's all important to understand here, right? So we're seeing some mixed signs. ETF inflows, MicroStrategy look okay. Bitcoin's price, altcoin dominance don't really look good. They look risk off right now, or at least in a no trend scenario. But why do I believe that what's going on in equities right now is where you should put your attention? This is really the big story here, guys, right? Recently, there was an open source model launched in China, and it's, of course, even though it's launched in China, it's open to the world, meaning it's open source. Everyone can review its code, everyone can access the model, you can download it, utilize it in any shape or fashion for commercial purposes, for recreational. But DeepSeek is this model that has been released, specifically the V3 model that just got pushed out. And it's come with some major significant breakthroughs in how the model operates. Now, beyond the fact that you could benchmark the model here, just for those who don't know, like when you benchmark a model, like an AI model, it's basically testing its capabilities to do various functions, mathematics, to understand logic and reasoning, to be able to do tasks that you want it to do. I want it to build a video game, like a simple game like Tetris. Can it do these certain tasks? And can it actually create valuable outputs from these queries that we're providing it, right? The important thing I wanted to emphasize is that while obviously there's a lot of statistics out there, a lot of analysis and benchmarks that showcase DeepSeek does a better job than a lot of the models that have launched in the United States, even the really high level premium and really high parameter, like billion, multi-billion, if not trillion parameter models that have come out of OpenAI, that it outperforms those, which is already pretty disruptive as is. The big thing here is to understand the cost to make the model and to essentially utilize the model. Now, as I mentioned earlier, the performance is pretty much on par with other models, but the important dynamic here to understand is how much it costed to actually generate the model, which in most cases, AI models usually cost hundreds of millions of dollars to generate because they utilize a lot of graphics processing units, these GPUs, these specific cards that are made by NVIDIA, right, to be able to go out and train these models. But along with that as well, there's also a cost when it comes to querying and actually utilizing those models. That's why you have to pay a subscription fee if you utilize ChatGPT and you want to be able to access the more complex models or have unlimited, usage, right? There are usually throttles or free limits for end users. These two things have really led NVIDIA and any other chip makers who are looking to get in the space to benefit greatly, because there's a need for GPUs in order to process this demand, this usage of AI. However, what DeepSeek recently did, and there's a very good thread here by Morgan Brown. I don't want to preach it as gospel and say that it's absolutely 100% completely true or that it's the right opinion to have, right? We're going to talk about some of the other opinions here, but the problem that some people have realized with DeepSeek is that because it is such an efficient model in the way that it was made, so instead of costing around $100 million to be made, it only costs around $10 million of GPU resources. But along with that as well, in order to utilize DeepSeek for various purposes in regards to AI, the cost for tokens or the amount of content generated is around 95% cheaper than utilizing O1 or some of the other models from ChatGPT or OpenAI. The main thing I want to say here is that this basically removes a huge chunk of the demand to get the same results, if not better in many cases. It takes a huge amount of demand for GPU resources out of the equation, for electricity out of the equation. That was a huge selling point of this whole AI narrative. Now, again, I don't want to preach this as it being absolutely like set in stone, right? But this is something that, from what we can see, we can debate on the slight semantics and numbers. This is a much more efficient AI model, and that's great news in many ways. It's great news for us as end users. I mean, they made it open source for one matter, but beyond that, it's practically no cost to use. It's much more accessible for people. This means we can train models that are just as effective as our top ones in the United States for a fraction of the cost, right? But beyond all of this, this is going to put a huge dent, potentially, in NVIDIA, right? Now, some people believe that this basically plays out a different way. Some people believe that essentially the better these models are going to get and the more cost effective they are, this is not going to set any lower demand for GPU resources. It's just going to mean we're going to, in the same way we reduced the cost of generating an AI model by, basically to a tenth of the cost, we're going to see a 10x forward growth in new models being created. And in the same way we reduce the cost by 90% to basically query the API and be able to provide a prompt and get some kind of response, we're going to see multiple fold growth in the usage of AI, and it's going to counteract that. This is something that's essentially known at the end of the day as the Yevon's paradox. Now, essentially, it's this idea, again, that we're going to be able to see future growth due to that cost reduction. The more productive, the more cost-effective you make something, right, the further efficiency increases you have, right, then essentially you're going to see more usage. And you can think about this in this analogy that, if you were to have, for example, cars that are more fuel efficient, then at the end of the day, you're actually probably going to see people driving more at the end of the day because it makes the usage of gasoline to get from one place to another more efficient, right? So this was something that really came into the conversation because Satya Nadella, who's the CEO of Microsoft, tweeted out about this pretty urgently after DeepSeek and kind of spun it in a positive way that actually this is going to be good for AI and it's going to skyrocket adoption. I'm going to tell you guys something here. I'm of the idea here. I try to view things in pretty practical terms. AI already, like in its current state, is pretty cheap. Like, for how powerful this technology can be for certain use cases where it is applicable in generative AI, AI, like the fact that ChatGPT allows you to use a couple of free queries every single day, and you have to pay $20 a month to access most of its models, and you can pay $200 a month for the really advanced stuff, right? That's very affordable for people who are using this in the workplace. That's a price that any company will pay, that anyone can access to. I don't think by reducing the cost of AI by 95% for most API queries, that is going to lead to this exponential climb in AI that just didn't exist before. Because the cost saving reduction of automatic phone calls, for sales or for customer support that you could use AI voice for basically using ChatGPT to generate text-based content or art or all these different things. I think all of that is already so much more cost effective. So I don't think this idea of the Yvonne's paradox is really at play here. I think there's a chance that it could really essentially break that. And again, I recommend you guys watch this video from Matthew Berman. Now, he talked about the DeepSeek R1 model, this new V3 model that came out, and really benchmarking it. I have to say, at the end of the day, it was a really impressive demo. But beyond this just being a more efficient model, right, and being able to obviously add value for companies and whatnot, we can see very clearly that for the S&P 500 and for the NASDAQ 100, right, NASDAQ 100 is down 3.7% right now. This is the biggest futures drop we've seen since back here, back in August, right? I'd actually even say it's probably set to be even bigger than any of those trading days, right? So why is the market dropping like this? Not to mention at a lower relative high from the one back in December. It's because this is going to crush. There's a very big chance that this is going to crush the necessary demand of capital expenditures from Meta, from Amazon, from Microsoft, from Tesla, from Oracle, from all these big tech giants to go out and spend money, right, on the future promise of AI and offering AI services to buy GPUs from NVIDIA. And if you don't believe me that what's playing the biggest role in all of this is NVIDIA's price decline, take a look at this, down 11% here over the pre-market trading. That is going to be a very nasty open. This is something that I will say very clearly here, guys. Doesn't matter if you're just in Bitcoin or altcoins. It doesn't matter if you're in stocks that aren't tech stocks. This is the kind of thing that starts at least a mild correction over the next month or two. This is enough to where it's going to shake up expectations for the market and lead to a major repricing, where the market probably priced NVIDIA way too high, betting on the idea that there was going to be a continuous stream of demand for GPUs. Now, I'm not saying that NVIDIA is going to fall off the face of the earth tomorrow. What I'm saying is there's a repricing going on, a repricing of expectations about how much all these big tech companies would be spending on NVIDIA. And you can see that it's also having a negative domino effect for the companies themselves. Meta is down quite big, about 4.5%. Amazon down 5%. We can see, for example, maybe we can take a look at Netflix, but Google, like real tech companies that are basically involved in this trend. Apple as well, down less than most other players, down about 0.9%, right? And you can see here again, who stands to benefit, right? Because at the end of the day, Apple, as a company, didn't spend the last year buying up a ton of GPUs to offer AI-related services. They just simply offer Apple Intelligence. It's the software play, right? But in regards to Meta and Amazon, and I would bet as well if we look at Oracle, for example, they are now holding a huge amount of infrastructure. They've put a lot of capital expenditure into buying these GPUs. And now if those GPU resources are not needed to train models or to query for various AI use cases, at least at the extent where it was before, then these stocks are going to trade much lower. That's going to be a huge wipe of equity value. That's just going to happen right there at the open of the markets. It's a huge gap down. So I'm not trying to be negative here. I'm really just trying to bring to your guys' attention about what this really means for the markets. And that broader negative sentiment, while I don't think that situation doesn't really directly impact Bitcoin, the negative sentiment over the entire positive AI trend that was there before, now starting to unwind, will definitely have a sentiment impact on Bitcoin to some extent. So don't be surprised if this comes down to 92K. Don't be surprised if it breaks the 100-day and comes down here to the 200-day. And don't be surprised if we get a 35% correction down here well below the 200-day moving average. That's not out of the question. We've seen this before. We saw even back here, just as a recent example, right? We saw a 32% correction from top to bottom here over the course of March to August, over 6 months, where crypto markets did nothing. Buying altcoins would have been a fool's gambit doing that. So I want you guys to just keep that in mind here. I'm not saying you have to sell everything or panic, but don't be so shocked if that happens over the next couple months. Another thing I would also watch, as well as we're kind of a macro channel and we look for different opportunities, watch the Hang Seng Index, HSI, divided by the S&P 500. This is one of the major Hong Kong-based indices, a lot of Chinese-related equities. But the main thing I just want you guys to understand is that this has been bottoming here since back in January 2024. For a year, the Chinese stock market has kept on pace and actually setting some higher relative highs against U.S. stocks. So this is a first in we're talking decades here, right? Or at least, I'm sorry, not decades, but since back in 2009. So you're talking about over 16 years here where Chinese equities have underperformed. Now they're playing ball here with U.S. equities. That 200-day, not far at all from being broken. 200 weeks got a long way until we retest that, as well as the 100-month. And as we can see here, usually we get all the way up to those moving averages once we start to recover. We might have some sideways price action for a couple years, and then we break through. I'm just saying, keep an eye on this. It could be a great short-term trade opportunity. I wanted to toss that your guys' way and just tell you guys to kind of keep your eyes on it. But again, at the end of the day, we're going to continue to watch these different individual stocks. How NVIDIA opens here and where it trades afterwards is going to tell a lot about the direction of equities over the next couple of months. To put it in perspective, this is a $340 billion equity decline in one company. $340 billion that people thought they owned is no longer going to be theirs at the open of the market. And the ripple effect that that has across various other tech companies, across the broader AI narrative, and then, of course, obviously in AI or crypto-related projects, that is going to have a negative domino effect, right? So it just means, more than anything, that we might have some great dip buying opportunities, or that we need to, at least at a minimum, maintain some cash for now, right? I don't think that's too overly pessimistic. I don't think it's too far out of the realm of possibility. It's just something to be prepared for. So I know we're rambling on a good amount here, guys, but again, I think that we're at a point here, we have been for the past couple of months, where we should be sitting, waiting for that opportunity to get a much better entry point on Bitcoin, the broader crypto market, on assets as a whole. And I think you're going to get that here in Q1. I don't think it's the end of the world. Doesn't mean it's a recession by any means, but it definitely means that these companies are going to have to completely readjust their trajectory for spending and their bets on AI. It's just something to keep in mind. So I hope you guys have a fantastic day wherever you are. Thanks so much for tuning in as always and letting me ramble a little bit. If you enjoyed this, consider dropping a like. It's a great way to support the channel. And I'll see you guys right back here on Monday next week. Take care, everyone.